The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, this afternoon at 5 o'clock, it's 5 to 6 p.m., 6:30 p.m., 90 minutes of a webinar I'm presenting to subscribers. There's still time you can become a subscriber, money back guarantee. It's for opening call subscribers. That's my daily newsletter. Anything goes, the stock market's key phase. The reason why I call it a key phase is because if the market goes to a certain level in a certain period of time, it's going to mean one thing. If it starts to stall and doesn't go there, or that's on the upside, and it starts to stall, could mean something else. We've got a bunch of things that are coming up, the same things that were coming up earlier, that was in the last quarter of last year. Now, many of those things have been ameliorated. We're looking at impeachment, no impeachment at this particular point. We were looking at the trade war. Well, 90% for the Chinese is very good, if that's what they correct in saying that that's what's been resolved to a certain extent. But the last 10%, well, you know, the last 10%, that's the tough stuff, especially if you're dealing with the Chinese. I think that's going to be a real stickler. And then there's something here that we've not discussed before in the same relationship to the market. It's been kind of an external event, and of course, earlier in the year, we had the amelioration of the rate increase from the Fed. But what we haven't been discussing is what happens if there's a blockage at the border and trade with Mexico suddenly comes to a screeching halt. That has an impact other than avocados. That's going to have an impact. That's going to have an impact that says, you know what? There is a niche in the whole smorgasbord of areas that have kind of been resolved, but there's a niche here that could become just a small little thing and then a very big thing. So I'm just putting it out there to say, you keep wanting to look at the horizon to say, what's on the horizon that I'm not, is there some tsunami sitting there that you won't recognize until it's right upon you? I'm just saying that's something that I'm looking at. And how you deal with it is going to be very difficult. Obviously, autos and a whole bunch of sectors are going to be very badly hit. But I'm looking at it and I'm saying, you know, this is a fascinating market. I like to say in the Chapman way, we're looking at the lowest identified low bar. We try to climb on board and go for 4 higher peaks at least, and alphabetize them. Peak A, next one higher is B, then a C, and then a D. A D, other things can happen. That's number one. Number two is we're always looking at chart patterns, the arch and the cup. Markets are only made up of going from one point up, trying to come back and test that point, or coming from one point down, getting back. Do you break above it? Is that where you stall? And the other thing that I think is quite important is that within those contexts, you've got this sharp move down and then the arch formation that retests the left side low. If it takes it out, that's very negative. If it holds, that's good. And on the other side, you've got the inverted Y. It's a reversed Y pattern. And if you go up and then you retest, you break out, that's very good. That's exactly where we are. That's what I'll be talking about in my webinar tonight, as well as many things, whether it has to do with fashion, from Marie Antoinette's revolution style dresses, that was a little difficult period there in the 1790s, I would say. And look here, 2019, 1.5 million for this little baby dress here, a peacock dress. I'm going to be talking about where we are in the socioeconomic, political world. Look at this. This is a sartorial splendor. That's way back. Look how the men dressed earlier on. Look how we're starting to dress now. Look at the poof. I don't know what we call those things in the hairstyle. We've changed a lot. I'm talking about mega things like a 300-mile-per-hour car. None of that has anything to do with the immediacy of where we are looking at these particular charts. Is this a template match Are we there, about to break out to the upside? Or are we right there, about to pull back one more time before a really spectacular move to the upside? Be discussing a lot of those things. Be discussing patterns, chart formations, looking at, let me just quickly get to this. Oh, this is just one. This is one that we have. Bank of America. Look at that. Daily, weekly, monthly. The monthly looks, wow, what a decline from the 33 area down to the 20, 22, 23 area. And then another rally. And then it kind of stalls. You can see the resistance line. Look at the weekly chart, trying to break out from Chapman wave falling axe formation. MACD's okay. Stochastics, okay at 72%. But look at the daily trying to turn up here. Look at the spectacular move with the technicals just kind of okay. What does that mean? I'm discussing all these things in terms of the relationship of stocks that we own, stocks that we want to buy, stocks we put in a bid for. Where are we? Hey, what about if I go to real life charts? What about something like, here you are. This is that peak D that we're looking for, made a peak C1, C2 in the most latest 2-minute chart. Looking at the 5-minute leg C, it looks like it wants to go to a leg D. Hey, is the 10 minutes saying we've still got a rally going all the way through until maybe 1:30, 2 o'clock as we go maybe to a C and then a D, and then maybe what do we do? Okay, so those are things that I'm going to be discussing tonight in terms of chart formations, where we are, what we're looking at, why I still call this a mega bull market, and if we've missed particular positions, how are we going to get in? How can you do that when you miss something that's really taken off and it's something you wanted, but you just either didn't get in or you missed it or you didn't see it until you thought it was a little too late and it's still going up? I'm going to be talking about the semiconductors. Hey, what about the SMHs? Remember the chart that I showed you? I don't know if I've got it right here. The chart that I showed you that said this is one of the worst things that you could see. No, I think I finally took it off. Maybe I've got it. All right, I haven't got it, but I've got it in my webinar where I showed you the, I think I put it in here. There it is. Yeah, this chart here where I showed you that the semiconductor shipment was just a total breakdown going into January. And now look at the stock. This is the SMS. Look at the ETF. You know, if ever there was a divergence between fundamentals and the technicals and look at this. The MACD, the weekly chart just broke out incredibly, total disbelief. And then it went to a peak A, peak B, and now it's in a leg C, breaking above the Chapman wave, falling axe, resistance of the Chapman wave, repellent zone. This is the inside track. It's above that right now. And the MACD is good, and stochastics at 89%. What does that all mean? Does it mean to say that the people that I've been hearing talking about the semiconductors and that shipments are down and orders are down and they're laying off, etc., is that saying, no, semiconductor always looks ahead? And in fact, it made a high over a year ago, March of 2000 at 114.55, the SMH. It plunges down to 80. Now it's at 112.43. It's an eye blink away, 2 points. It could do that today to the all-time high. Unbelievable. All right. So we'll see. Is this saying we're closer to a deal? Everything's done. And now we're going to go into that next big phase. I'll be back straight after this. Dow's up 87.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
About NVIDIA, since it's already part of the SMHs, wanted to show you something very interesting. If I go from the gap down, this huge gap in NVIDIA, NVDA, which was on the 15th of November, the low was 195.50. The very next day, the high is 170.66, 20 points lower. And it's taken all this time to get back to 180. What's the high today? 191 round number high. If you look at I put this rectangle in some time ago, said, rectangle formations can last a lot longer than your patience. It went to a peak D from the low that was made, the second low. First low was back at 124.50. Wow, what a move down from nearly 300 to 124.50. NVIDIA. Then left side, right side price time match takes it to the low bar of 131 round number low on the 28th of January. I'm just going to put that in for now. 131 round number low. That wasn't the low. Remember, it was 124. And that gives you exactly to tomorrow a left side, right side price time match that says 195.50 would be its target. And it's already gotten to 191. It's got a day to go, but it's in leg C. So I'm watching this closely. Now, one of the rules of thumb that I have, I've got a lot of thumbs. One of the rules is when a stock gaps down and over a period of time, it fills that gap. When it starts to trade into that big, usually a big ugly bar there where the gap down started, when it trades above the gap for about a week and a half, if it's a daily chart you're looking at, and then pulls back but doesn't go back into the gap and instead starts to make higher highs and higher lows from that point on, it's usually done with that particular phase. It's now in a really strong bull market, meaning going from a daily chart to a daily chart, not necessarily a daily chart to a weekly chart. However, I've seen enough times where the weekly charts started to move as well. Okay, so NVIDIA, real quickly, excuse me. I'm calling that an F/B, so this is a G/C. Everything about it says it's probably a C. I'll just put it in because I shouldn't. The MACD is still good, stochastics at 85%, unbalanced volume's good. For now, I'm calling it a C. It's over the 200-period moving average of 187.65. So S&P in the den. I like it very much. I would just say that I would not be surprised if NVIDIA at some point within the next, if within a week, it doesn't have to be a week. Today is Wednesday. By Tuesday, I would not be surprised that even if it goes a little higher, you're seeing a trade in the 183-ish area, 185, 183, or maybe a little lower, that it's had a bit of a pullback based on just this particular pattern, and the 200-period moving average then become the orange line, becoming some kind of a support at first and then a repellent just for a little while. So I could see it chopping around. But this is good action. If you are long, I say congratulations for being long. My only thing here is, where would I add to it if I thought that it was going to be in a major bull market from here? And that says I have to look at 182 to 177 over the next 2 weeks or 3 weeks. And that's going to be key. Next question I had was CLF. Let's see what the question was. Coda says, CLF, please. I bought this pullback as you suggested, working great. So CLF is up 51 cents at 10.79. This is Cleveland Cliffs Inc. It made a low just recently at 9.21 on the 25th of March. So there's a really good percentage gain, a really, really good percentage gain. It's in a trading band in the weekly, and the monthly is improving slowly. And all I would say is congratulations, hold on. I would treat this as something I might want to add to. And if that's the case, it's 10.78 right now. It's really the 10.30s to 10.15 area. If it pulls back there, how it pulls back is going to be important. Will that be where I add, or is that where I say, oops, maybe it's going to have a deeper consolidation? But so far, excellent action. NVTA, what is that NVTA? NVTA is NVIDIA. Oh, I've done this before. NVIDIA. So this is 20.88 on the 28th of Feb. 28.88, double top. Let me just double check here. I did that. Yeah, 88. So this becomes CND. It made a peak D. Oh, I think we were talking about this. Yeah, this has gone to a D. I should put in a down. I'm going to put the down arrow in because it met all the criteria. It can make a U-shaped formation, and that U-shaped formation sounds like a really medical term, a U-shaped formation. That says that if it breaks decisively above 25.76, if it goes into the 26 area, that's very positive. If it stalls in the 25s and then comes back and goes below 24.26 over a period of a week and a half, it says, you know what, shorter term, probably made some kind of a top. Let me just see, A, B, C, D, E. Yeah, this is an E right here. Let me just put that down arrow in, E. Oops, not a W, but an E. And then I'm going to put a down arrow because everything was there for a sell mode in the weekly. This is A. Just for now, I don't see any reason why I shouldn't put an alternate count, F/B. Just, I want to be a little careful in this. I like everything about it. This is, I don't remember, what does it NVIDIA do? I don't remember what it does. But whatever it does, it's doing something right. It's eating its brand. It's doing good. All I can say is that this is holding very nicely. That ugly candle of, that long-legged doji candle of last week says if there is a close, usually by Friday, this is 2.5 days to go, above 25.67, it says at least for the short term, the doji open and close candle of the 23.55 is good support, and there should be, if there's a higher, it doesn't have to be a close, but a higher high this week above that 25.67, it says next week could see another high, and then be careful because it's probably, it's probably going to test the that open close of last week. And if it closes in the next, by Monday, if it closes underneath 21.23, it says be careful. There's the H pattern, lowercase h pattern in the daily chart. and it says be careful because it could pull back to the 20s. But so far, everything about the weekly and monthly charts is good action. Short term says struggling a little bit. It's had a spectacular move. I think it's digesting gains. I wouldn't be surprised if it's kind of stuck between 24.60 and 22.20 for a little bit longer. Let's see. Did anyone mention? Yep, the person who asked me. Yep, there it is. Yeah, NVTA with a T. Yep, I got that. I'm not sure what they do. NVIDIA Core trading at 24.26, up 1.02, up 4.39 today. Oh, yeah, good action, very good action. All right, we'll talk about gold, we'll talk about the dollar, we'll talk about other things. We're in crude oil, the TLT. As soon as I return, Basil Chapman, Dow's up 90, S&P is up 16, and the QQQ is trading up 2.04 at 184.77. Really good action. Be right back. And don't forget my webinar tonight at 5 o'clock. I'll be right back. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, so I must thank Pat for sending me this information here. TSM, Taiwan Semiconductor, came out and their inventories were now too low for what it's worth. Thank you so much for that. Yes, I actually heard something about that somewhere yesterday or last night, and I thought to myself, wow, if that isn't a great example of fundamentals being late and technicals giving a good sign, I have to admit that was a huge miss on my part, because we could have had semiconductors for a most spectacular move. I'm sorry about that, but what can I say? I wasn't really doing just fundamentals, but it was a very confusing picture. So Taiwan Semiconductor leg E in the daily at 41.92 TSM, up 65 cents. Weeklies in leg E, making a U-turn. MACD is still good, strong in the weekly chart and the daily chart now. I would just say that 40 to 39 would be the key support on a short-term basis. A monthly chart has gone from 46.52 back in January of 2018 down to the 34 area, and now it's at 41.92. Nice comeback. It's got a long way to go to get back to the all-time high, although the semiconductor itself doesn't have much to go. It has an eye blink, and it could be there. All right. Okay. So a couple of questions I had. Would I look at STZ? I'll look at STZ right now. I spoke about it. So what was the question? Hi, Basil. You looked at this for me a week or so ago. I bought a small position at 169. Trading at 179 right now. Very nice. So what are we looking at here? 89, 59, 61. This is still leg B. Good. So as STZ is actually acting very well, I think it's going to go quite a bit higher. It's gone from a high. Did I not type that in? I'm sure I did. Well, I didn't. So let's call it 236.62 back in April a year ago. A year ago it's at 236.62. And now 236.62 for 2018. And now, after hitting 150.37 in December, it's at 179. So that's 20 points higher, nearly 30 points higher. In leg B, in the monthly chart. Okay, so $173, 171 area. What's going on with my internet? I'm hearing beep beep, and that's the support. I'm looking now, maybe not on worst case basis, but on a pretty serious pullback. Worst case basis goes back to 161, but I think that that was the low that was made just 2.5 weeks ago. I'm looking at this, and I believe that there should be a move towards the 182 area. It's this candle here I'm looking at, right here, the high of the week of the 21st of December, 181.60. So I'm looking at this and I'm saying 181.60 would be very good. If it breaks away from the weekly 200 period moving average, orange line at 172, nicely above the 174 14 period moving average, that's the further away it goes now, right now, in this particular phase, away from this support, the greater the chance that the low that was made on the 11th, I think, on the 20th of March at 163, we won't be seeing that, and that the 171 to 170 area will be very strong support. I like what you did. Now, what I'm going to suggest to you in terms of an add-on, if yesterday was a peak and this was now CATSIM, you got to be a little careful. I'm going to suggest if in the next 2 weeks there's a pullback towards 174, 173, text me or email me. Let's look at it again. I think that would be the add-on place. I don't want to get too carried away now because the weekly has an arch formation. This is the second arch gone above the previous peak A and B. That's very positive. I just need to see if there's a default. There's a pullback below yesterday's low of 175.50 in the next 2 days. That's not good. My suspicion is that, and I'm going to be talking about this in my webinar tonight for those of you who are interested, the MJ, that's the harvest. That's the cannabis sector ETF. It's a fund. I'm going to be talking about this because this is early in the game. But if you're looking out years or decades, what happens now is going to be critical for the next 6 months to a year. What happens in that period is going to be very important for the 1 year to 3 years. Most importantly, this is just the beginning of the legalization. This is like 1920s. I'm not gonna. I decided right now. I've got a lot about the 1920s relationship. I'm going through that as quick as I can. I want to get to stocks tonight. We're looking at what do we want to buy, what have we missed, what can we get into, where are the places to get into, what sectors should really benefit if the market is going to break out, or if it's going to break down in the shorter term. What do you want to buy and pull back? This is, to me, one of the most important things. And this whole sector, Constellation Brands, spirits, beer now marijuana, I suppose I better call it to be polite, cannabis sector. It makes an all-time high of 236, plunges to 150, and now it's at 179. It's working its way back. I think the legislation, a whole bunch of things, especially for them, because what are they now? Are they in the spirits, or the beer, or they all these different brands, or are they in the marijuana business? You can't. They're going to have to take as much effort now to get this right, and to make this as strong as possible to be able to alleviate any sales decline in the spirits area. We don't know if there's going to be an impact. So this is probably, for me, I'm going to have, if you don't mind, you didn't ask me, but I'm going to be looking at GWPH. This is more straight than the other. This is holding very nicely up at the higher level. This is the one, GW Pharmaceuticals, medical marijuana. It's a British company, I think, at 165. Oh, 165. Wait a minute. STZ is trading at 179. Okay. If you wanted to ask me which one is best on a chart basis, I would say that GWPH is just taking a nice breather. Wouldn't be surprised if it has one quick dip into the 155 area, try to fill the gap a little bit more. But my suspicion is based on the peak B in the weekly. Sneeze coming. We're looking at, excuse me, my noontime sneeze, I guess. We're looking at that monthly chart having made a new recovery high. Maybe it's an F, but boy, if that's an A, it's still going to go to B, C, and D. I think this is one of those that's got a slightly better, not a slightly, it has a much better longer-term chart. I don't know about the business at all. I'm just looking at the chart. Just wanted to mention that. You might want to mix. Maybe instead of going fully into one, you might want to have the two of them. That's just one way to think about it. I'll be talking about it tonight. In any case, not in this case. I don't know if I have time to go to specific stocks, but definitely about the sector and the chart that we're looking at, which is very important. Had a question. Yep, I'll go. Yep, Boeing. As we go to a break, Boeing's down 4. It's off my list now for that option trade. Wow, that option went from $5, just under 5 that we actually bought it at. We got a very nice profit. We didn't hold it long enough, but it actually went to over $20, a fourfold increase. Now it's quite a bit. Now it's at 12. But we're not in that. I'm going to skip it for a moment. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. Yeah, so thank you to Kelly and the Den mentioning that where did it go? Let me see if I can find it here. Studies have shown that spirit sales drop when cannabis is legalized. In Colorado, the decline was about 20% in spirit sales. Wow, I did not know that. Was my guess. About 6 months ago, I think we were talking about Constellation Brands, and I said, you know, for them to move from their major, they did everything right. I don't remember the name of the guy. I've seen him interviewed a number of times with Kramer. He just nailed every single trend. He was with a huge company to do this kind of very local type thing and make it a success. That to me was really impressive. And he did it in all these different brands that they came up with. This is something new. They haven't done this before. So I think there's a twofold factor there with SDZ, Constellation Brands. That's number one. Number two is the question was, let me just see. Question, Basil, who's your favorite pianist of all times? You know, pianists, it's like orchestras. You can't really say which is the best. You know, the Boston Symphony does major works, the big things like the Mahlers and the Berlioz Symphony Fantastique. They do it unbelievably well. But you can have a smaller orchestra like an English orchestra that would do a fantastic thing and maybe a smaller piece. But as pianists go, Rubinstein playing Chopin is absolutely, you just have to say, well, isn't that probably the way Chopin played it? And Rachmaninoff playing I got a funny story to tell. Rachmaninoff there's this famous Rach 3, it's called Rachmaninoff Piano Concerto No. 3. Well, he was with the New York Philharmonic, and Gunther Schuller, one of the famous horn players and composers and famous musicians in the country, the most famous unknown musician in the United States of America, probably the most influential of all. He did third stream music. He played jazz on horn. Age of 19, he became a horn player in the Met Opera, just an unbelievable musician. He was the president of the conservatory when I was at the New England Conservatory. I got to know him very well, worked under him for a long time. He said when he was, they were playing a concert now. I can't remember why it was a piano concerto and not an opera at the time, because I know he did play at the Met, but it might have been when he was subbing or something at the New York Philharmonic. But he said he was on stage and they were rehearsing the third piano concerto and by Rachmaninoff. Rachmaninoff was the soloist. He'd come in from Russia. He was playing it. He'd been doing a big tour here in the United States. And he kept making these mistakes. It's an incredibly difficult work, and he kept making these mistakes. And then he suddenly stopped, and he looked at the orchestra, and he got this funny grin on his face, and he said, "Whoever wrote this piece must have been crazy." Anyway, So that's, yeah, Rachmaninoff playing. If you can ever hear a recording of Rachmaninoff playing his own pieces, it's quite incredible. All right, and Stravinsky, let's go on. So the Dow's up 76. This is what I'm looking at here. See, now they got your peak C1, C2 in the 2-minute chart, peak C1, C2 in the 5-minute. That supersedes the 10-minute peak B, because this, if it starts to go underneath 28.82 at any point, then the next it's 28.86, the 2-minute. The June E-mini, ESM 19. If it starts to break down here, that's going to be a big deal. So I'm watching this, and I really think we're in a little topping motion right now. We could have a couple of flurries to the upside. I don't want to take time to talk about it. I want to go straight to crude oil. Crude oil is trading right now down 21 cents. Leg D, potential doji top after a Chapman wave. This is, look, peak C1, C2 with a D coming up. And look at that. That's the Chapman wave stalk wave formation. There's the neck. There could be a pullback. And where would it test? It would have to test somewhere around the 60.38 of the continuous contract. That's about 3 points lower at some point fairly soon. But this is important because it's holding really well with good technicals. And the weekly chart in leg B, if it holds into next week without breaking down and can come back anywhere into the 61 area, there's a good chance that at some point in the next 2 to 3 weeks, 65 is hit based on the weekly chart strength. That's that. TLT, let's do that, the 20-year T-bond fund. I'll be talking about bonds tonight. And if you look at this, it's made a peak D top. Remember Chapman wave? We're always looking for those Ds. Didn't I just show it? Yep, I showed you the peak D in the Chapman wave methodology. And that D at 126.69 on the 28th has pulled back to today's low of 123.43. I'm looking at this and I'm suggesting to you that there's a good chance that that D in the weekly chart is saying a little bit of a pullback here, but we've got to watch the gap on this doji candle of the 21st of March, 123.09, 122.74. If that becomes support and then there's a bounce at the same time, it goes right back to 124.70. This is the TLT, Lehman 20-year T-bond fund. And at the same time, you start to get a pullback in the market, then we're looking at the chance that we're starting to see a shorter term pullback. Now, I'm going to mention this again. You've got Brexit coming up. It seems to me that May, a really good one, I don't know who wrote it, yesterday in the Den, someone said, this is the first time in the British Empire's history, I think, something like that, British Empire's history, that May is going to come before April. Yeah, it's one of those things that just sounds great, but it doesn't have to be so good as a joke. Brexit. If Brexit, she has not proposed, she's not worked with the others to be able to make some kind of a compromise. I'm not sure if Thatcher would have done it, but I think Thatcher would have had a plan B that was a little more negotiable. She doesn't seem to have the flexibility to get that negotiability. That's really needed right now. So this is going to be important because you don't want to keep stalling. At a certain point, the Eurozone, they're just going to say, hey, you know what, make a decision. You've got another week, and we're not going to give you an extension. So I'm looking at this, and we talked about the last quarter of 2018. So Brexit could come back, and it couldn't come back either as just another fungible thing there, nothing gets decided, and we just move on, kicking the can down the road, or there's a situation that says crisis looming in Brexit. Whoa, crisis looming in the Mexican border. Whoa, the Fed doesn't like to be hamstrung. They want to show a little independence. They might just start saying, you know, some of the information we're getting right now, some of the data doesn't say that we've got to ignore bonds altogether. Maybe there'll be a little bit of a tightening later in there, anything like that. So you've always got to keep that in mind. But if you're looking at the charts, the most important thing is, if you're looking at the New York Stock Exchange, which is the really big 2000, this is the big one. In leg C right now, I believe, yep, leg C in the daily that says, got another couple of days, maybe it's early next week before we get some kind of a pullback. That'll also be leg C in the weekly chart. I have a rule of thumb, another rule of thumb. Let me just show you my thumb. And that says that within the context of peak A and peak B in something like a weekly chart, if there is only a minor peak B push to the upside, and then just a very quick C, you're starting to see deterioration in price that will show up in the technicals. So what happens by Friday's close is going to be really important. This coming Friday in April. I'll be right back. Dow's up 67, S&P's up 14.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, Steve comes up. Then you've got, let's see, Dave White, and you've got Tom O'Brien. Hey, I've got my webinar coming up tonight at 5 o'clock, 5 to 6:30. I think this is going to be a really important one sector-wise. I'm just doing a lot of work on that. What do we want? What's looking good? What's getting a little overboard? Had a question here. We do think the VIX sometimes indicates 1 day ahead that there could be a turnaround. I'm looking at this and I'm just thinking that if you do that, I would prefer to do that with an option, but if you want to do it with a TVIX, I think it's a day or two early. Look, we saw the New York Stock Exchange. It's a little early there. QQQ, where is that? AB, yep, there's only a C. No, I'm going to say, I might be wrong. I just give it another little day. Wow, look at that. 187.53 was the QQQ October all-time high, and we're at 184.92 right now. What a beautiful V-shaped pattern. It's 2 weeks late in terms of the exact low with the left side, right side price time match. This is good action. Hey, maybe yes, but I would maybe it would be a quick pullback tomorrow, but I'm thinking I'd rather wait just another day or two. Let this play out. I need to see it. So so we're about to wrap up. I want you to take gold at this particular point. It's just saying it's just kind of stuck here. Right on the 200-period moving average. It should have used that to bounce to the 1302 level. It could still do that. But I think the dollar has a little more room to go to try to break to the upside. It's down 29 ticks right now at 97.02. Double top, I'll have to look at this. MACD's good, stochastic's good. I think there's a chance that the dollar is going to try to break into the 97.72 level for a leg D in the weekly and a leg C in the monthly. I'll talk about that tonight. A lot to do, a lot to talk about in terms of what to buy, what not to buy, what to step away from, what sectors look like it'll work. What about the FANG stocks? Are they still consolidating? We'll talk about that. Meantime, back at the ranch, we've got a lot to do here in terms of the next, I would say, in the next 3 to 5 sessions, an immense amount of material and information is going to come out about what's working, what's not working, what sectors. Look at wheat. All of a sudden, does wheat. Not bad. Holding very nicely. Corn and soy as well. I'll be back tomorrow. Otherwise, have a great day. I hope to see you tonight in my webinar. Check it out.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The